Hello and welcome. You're tuned in to CNBC-TV18. We're coming to you live from the Mumbai newsroom. I'm Sonal Bhutra. You're watching your stocks. For the markets, the run continues. It has recovered sharply from the lows. So that is something we are tracking. And across the board, we are seeing some pullback coming in as well. But this is a show where we answer all your individual stock queries and we'll continue to do so. Joining us today is Rajat Bose of RajatKBose.com and Sharad Avasthi, Head PCG Research as SMIFS to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us today and taking us through all the queries as well. So let's not waste any time. We'll get to the first one now. Rakesh Bhatnagar is writing to us from New Delhi. He holds 1,200 shares of AGI Greenpac at 283 rupees a share and 400 shares of Zen Technologies at 413 rupees a share. He wants to understand the future prospects of his investments from a one-year perspective. So let me come to you first, Sharad, because these two stocks, at least from the Zentech name, these two have done well in last couple of years. What are you suggesting from a one-year horizon? Should the viewer hold it? Should they sell it? What's your idea?
For a one-year perspective, I think both look a bit stretched. You might not make much money with a one-year perspective. But AGI, Greenpac and Zen both are excellent companies to own if you are a long-term investor. Though Zen might have a bit of more risk given the type of growth it is trying to log in. But AGI, Greenpac, I think most of the supply they are doing is to alcoholic beverages companies. And I'm very bullish about that space. So their growth should be around 15-16% easily over the next 2-3 years. They should continue to compound at that rate. Considering that, I think FY25 the earnings should be 72. So if you can extend your horizon to around 1.5-2 years, I think AGI Greenpac you could be looking at something around 1100, 1150 kind of target, assuming 15 times kind of multiple. But if you have that 1 year horizon, I think the probability of you making more money from current levels is very minuscule, considering it's already trading near 950, 960 levels. Zen, again, a very interesting space, the way they have worked around the simulation space, the anti-drone space. Both are a big opportunity in India. It's a 15,000 crore market in India alone, and they have a strong position there. The government is also encouraging that business, so that should help them. And 50% of their sales are domestic, 50% international also, so that opens up another opportunity. The kind of growth the company has seen over the last 2-3 years on a very small scale is stupendous. But the current order book on a sale of around 300 crores, they have an order book of around 1,000 crores. So there is a possibility, if you look at historical numbers, it might look a bit stretched in terms of valuation. But there is a possibility that the earnings could triple from current levels. So it's an interesting idea to hold on. Though 1.5 year, I don't think it will make much sense. It might not give you much of a return. But if you can extend your horizon to 2-3 years, I think this is certainly a multi-bagger kind of story, which can give you very decent returns. 30 rupees kind of earnings, you can easily expect a multiple of around 30 to 40. So conservatively 900, aggressively maybe even 1,200 is possible on the stock. It's a very interesting story to bet on actually.
Okay, all right. So bullish on both the names. Thank you for that. Getting on to the next query, and it's an interesting one. Prashant Kumar is writing to us from Patna, holds 30 shares of Tata Motors at 100 rupees a share. He says he's making some profits, but he wants to know whether he can buy some shares of M&M. So, of course, he's seen a big surge in terms of price. The volumes were lower or the share number was lower, and that's the reason the absolute profit is looking not so much. But congratulations on the gains that you have seen, Prashant. But Rajat, let me come to you in the auto space. First, Tata Motors, what's your take here? And he's asking if he can buy some M&M. So what do you suggest there?
Well, I would suggest to buy both on declines. And current levels, there is some consolidation that is happening in M&M. But if you really want to hold on, then you should put a stop loss below 1,500. The recent low was around that level. And regarding Tata Motors, I would say that even here, you would do better to actually continue to hold on, but if you buy afresh, then this is not the time to do so. I mean, I have a feeling over the next several months, You might get it around, say, 550 or so. Around that time, if you buy, that would be pretty good. But don't buy at current levels because they are showing a bit of flagging their momentum that is seen, and also a bit of distribution is being seen. So it would be worth the investors' while to actually wait for some time and let them come down. Then you enter. I always emphasize one thing. Don't buy great companies, buy great stocks. Great companies can be lousy ones if you pay too much of a price.
Okay, so great company. So the next question is actually for the both of you because it is about HDFC Bank, because Ramesh is writing to us from Pune, holds 10,000 shares of HDFC Bank at 1,600 rupees a share, wants to know whether to book his losses or remain invested. Rajat, first up to you. Technically, how's that stock looking? Because it's been underperforming for a while.
Technically, it is looking pretty weak. If you look at the monthly chart, of course, the month of September has not come to an end. But on the monthly chart, it looks that 3 black candles. And it is now testing the 20-month moving average. 20-month moving average is, if it is now currently around, say, 1530. So if 1530 gets taken out, then there is a possibility that it might actually test 1400 kind of levels where the 50-month moving average is located. So you at least wait. Yes, it's a blue chip, it's a great bank, no doubt about it. But at the moment, looking at the volume figures as well as the price chart, it says that there could be more downside waiting.
Okay, so some downside is expected for HDFC Bank. Sharad, come in on this. The viewer is of the question whether he should be booking losses at these levels or should he hold it for long term?
No, I think certainly hold for the long term. The merged entity becomes the 7th largest bank globally. Though in the short term, because of the recent announcements, there is a bit of jitteriness. But what I think is that at both the gross NPA level as well as the NIM level, both these issues will be very well masked with the kind of growth that we are expecting in the bank. A large entity like HDFC Bank is planning aggressive growth over the next 3 to 4 years. The branch additions are a prelude to that. I think that should continue over the next 2-3 years. I think every quarter as we see the numbers, a lot of confusion regarding how the merged entity is going to look post-merger. A lot of speculation regarding that will be put to rest. And post every quarter, you will see an improvement in the sentiment around the stock. And as growth kicks in, which we expect to be very robust for HDFC, given the aggression that they are showing. So across all the segments, I think HDFC will grow at a very rapid rate. We are modeling in a growth of around 16-17%. So that should translate to a book value of somewhere around 700 by FY26. I think conservatively also 3 times price to book should be very easily possible for the bank. If improvements are much better, I think even 3.54 times is possible. But to start with, I think 2100 is a fair target that we are taking. So continue to hold. Even addition at these levels is recommended.
Okay, all right. So hold for long term HDFC Bank. That's the word coming in fundamentally. But to the next query now, and Rajat, take it up because Shantanu Kumar is writing to us from Mumbai. Holds 20 shares of ITC at 300 rupees a share. He's a long-term investor and wants to know whether to book his profits or stay invested. Technically, Rajat, how is this stock looking? And then Sharad, I'll come to you.
See, this stock, technically, if it were to fall and sustain below 440, then it can go further down. Until such time it actually clears the level of 500, you do not see much of an upside. But when it reaches 500, its market capitalization would be something like 5,85,000 crores or even more. So given that kind of a situation, I think it is fully valued. Now, if you want to be a next investor for the next 5 years, that's a separate story. Then you can buy here as well. Otherwise, you wait for a better opportunity.
Okay, all right. Sharad, what's your take?
Yeah, I think it might not have so much up move left like in the past 1.5-2 years. But I think the growth should be around 11-12%. And they should continue to they easily get multiples of around 25 to 30. So if you are looking to hold on for the long term, next 1.5-2 years, you could expect a target of anywhere between 550 to 600 on the stock.
Okay. All right, gentlemen, it's been very helpful, but we have to get into a commercial break. We do that, but when we come back, we'll answer more stock queries on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. It's a show where we answer all your individual stock queries. We still have with us our experts, Rajat, Bose and Sharad Avasthi. They'll be answering all your stock queries. Well, to the next query now. Shekhar Agrawal is writing to us from Noida. He holds 30 shares of Vedanta at 80 rupees a share. He's a long-term investor and asks whether he can hold his investments for another 3 to 5 years. Sharad, I have to come to you for this because there's been a negative news today. The stock is down 6.5%, and that's definitely taking a toll on the stock right now. But the viewer here is making profits on this one. But for next 3 to 5 years, do you think this is a good bet for him?
Yeah, in terms of the current valuations at which it is trading, it certainly is a good bet. And I think today the news is more on the parent side, and there the leverage is very high. They have the most of their holdings pledged to their neck actually, so they don't have much option. And there are 2 payment updates due over the next 6 to 7 months, which they have to get through. But I think in case they fail to do that, and the risk actually boils down to the subsidiaries, which I seem to believe is a low probability. Ideally, you could hear about some stake sale or something that they arrange to get through. On a standalone basis, if you just look at Vedanta, I think the type of capex they are doing regarding the aluminium and bauxite, as well as captive coal, which is very aggressive, and most of it should come down over the next 2 to 3 years. Leverage is there, but it's not very high in case of Vedanta on the Indian side of it. And I think at current valuations, we are expecting the earnings to be somewhere around 30 rupees steadily over the next 2-3 years. 8-9 times is very easily possible. So I think fair value would be somewhere around 270-280. As a long-term investor, I think at these valuations, you should not be worried about exiting the stock. The big risk is that the group defaults and something catastrophic happens. But considering the assets they have on the book, I don't think that is something that is going to happen. Though nervousness might prevail, say, over the next 3 to 6 months because of this reason. But since you're looking at a longer term horizon, 3 to 5 years, I think you should wait for this capex that they are doing to start yielding results. And I think post that, there could be a lot of re-rating for the stock.
Okay, all right. So that's on Vedanta. Move on to our next query. Shalini Jain is writing to us from Pune, holds 30 shares of SBI at 300 rupees a share. She's a medium-term investor and can hold the shares for another year. She wants to know what the target price should be for her holding. Rajat, the banking space generally has actually underperformed the benchmark as well. SBI in particular, what is your take here? She's a medium-term investor. What targets are you looking at here?
SBI, if you look at it from a 1 year point of view, it has been pretty volatile, and then it is a large range-bound stock which is operating between, say, something like 630 to about 570 kind of range. Now, what is happening is that 20-day and the 50-day moving average, 20-day is breaching 50-day from below. This is a golden cross since both the moving averages are upsloping. That means that it is very close to both the moving averages. From here, you will get a bounce back in the short term, but after that, it requires considerable momentum to cross 620, 625, that resistance levels. If it can sustain above 620-25 range, then you will see further higher levels. It could be even 700 going forward. But at lower levels, one can accumulate SBI, and that level is around, say, 575 or so. And currently, I would say one can buy, but at lower levels also, you buy up to 575, putting a stop loss below 560.
Okay, take that point. So at current levels can buy, but if there is a further dip, those would be good levels to buy as well. Moving on now, Sheetal Jain is writing to us from Chandigarh, holds 20 shares of Sula Vineyards at 320. She asks if she can buy more shares or exit and switch to some other sector. Sharad, what's your take here? Because this stock has done well since listing. But do you think the near-term run-up that we have seen is something that will take a pause? She can switch to some other sector?
No, as far the sector is concerned, we are very bullish on the sector. More on the alcoholic beverages, diversified players basically. But even Sula should be in a very sweet spot, domestically brewed and one of the one of the only domestic companies basically. So I think the opportunities are good. Over the next 2 years, the growth rate should be robust, 15-18% kind of CAGR. And I think easily it can trade at 30 times. The larger players are trading somewhere around 40-42 times. So if it trades around 30 times, I think you are still looking at somewhere around 500 on the stock. So I think conservatively, even if you consider you should continue to hold Sula only for a target of 500, you can also consider adding now or even on dips or at in a staggered way. But I think it's a good bet to hold on to, and I'm very bullish on the whole Alcobev space as well.
Okay, so you're bullish on the Alcobev space, and the others have been doing well as well. Moving on now, Rajat, this is for you. Ketan Shah is writing to us from New Delhi, holds 1,000 shares of Suzlon at 11 rupees a share. He's a short-term investor and wants to know whether to hold or sell. Well, Suzlon has been in the news for a while now. There's a lot of focus on the wind power sector. Yesterday there was news coming in where the share purchase agreement was taken away and was rescinded as well from Mr. Dilip Sangvi. But for a short-term investor, Rajat, how would you look at the stock?
There is only one word: sell and book profits. Because, see, it isn't as if that Suzlon is bad, but the point is that from June level was about below 10. From there, you have already seen that the stock has more than tripled. And now, if you look at the weekly chart, there is a clear, it's a vertical rise, and chances are at higher levels, especially close to, say, 27, 26. If it were to go to those levels, a lot of selling is coming in. So my suggestion is that he is making good money, should actually book profits and stay for a better opportunity after the market comes down.
Okay, all right. So book profits at current levels is the advice coming from Rajat for Ketan. Gentlemen, thank you so much for joining us today and answering all these queries so patiently. I'm sure all the viewers have benefited from that. But with that, we have run out of time on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.